Samit Ghosh joins us, Managing Director and CEO with Ujjivan Small Finance Bank. Mr. Ghosh, what has led to a strong uptick in AUM growth and improved profits in Q3? NIMs also have been stable at about 10%.
Well, we had mentioned it in the last couple of calls or that these 2 quarters we've really actually, for the last 2 years, we built the base for the small finance bank, and we want to really grow our business, scale up our business, and which started from this quarter onwards. So all the changes, all the infrastructure, the people, everything was put in place, and we started building up our business, especially in the microfinance side. And traditionally, these last 2 quarters are always strong for microfinance. So that accounts for the business growth which we have done, and we'll have a continued strong performance in this quarter also.
Right. Net interest margins have come in at just shy of 12%, have been stable year on year, but some decline from 12% quarter on quarter. What led to the decline on a Q on Q basis? What is the outlook on margins going ahead?
Well, interest rates have been going up, but at the same time, we had a lot of, grandfathered loans which were at high cost from the NBFC days, and we've been able to scale that down to about 2%. So that reduced our cost of funding and offset, any increased cost which was there in the market due to this tight liquidity situation.
Have you got any sense from RBI as to where is the holding structure headed?
Well, we've been working on 2 areas for last 6 months. We've been working one on the side of succession for me, which I'll be retiring in November. And the board appointed a committee, and we engaged one of the top talent firms. So we finalized the list of 3 people, and we would be putting in application before the end of this month to the RBI. The second is a more challenging one, which we had hoped, earlier that it would be resolved from our earlier discussion by a reverse merger between the holding company and the bank, which would have been an ideal thing, given that we have, we are publicly listed and we have over 75,000 shareholders. But however, since Reserve Bank is insistent that the bank has to be listed, so last 2 months we've spent looking at various options with bankers, with tax consultants and legal counsel to figure out the best possible way, one, how to list the bank, and which would have minimum impact on our shareholders, and also dilute the promoter shareholding, which is right now at 100%, to 40% over the next 3 years. We've narrowed down these options to about 2 or 3 options. We want to discuss this finally with Reserve Bank and the SEBI to sort of finalize the roadmap which we'll be undertaking in the next 1 year, next year. So it's a combination of 2 things. One is how do we list the bank through various options which we have. And the second thing is how do we dilute our shareholding of the promoter shareholding over a period of 3 years. So it's a fairly complex operation which requires a lot of regulatory approvals both from the SEBI and RBI. So we would be engaging with them now formally and finalizing a roadmap. Once we finalize that, and we would be able to then come and announce it publicly.
If I'm a shareholder of Ujjivan, what should I expect? Because promoters have to reduce stake. There could be 2 listed entities. the holding company and the banks would be listed separately. There are too many regulatory yes, no, I don't know criterias which would be at play. Numerous amount of approvals would be required. Lot of court work will start. So if I'm a shareholder, what should I expect? I mean, too much of commotion?
Well, the thing is, we would, I mean, complying with the regulatory requirements is mandatory, so that's something we have to live with. But there are various options to make sure that, the impact on the value of the share is limited. And at the same time, if we can use this as a opportunity, I mean, it could be, we bring in additional capital, which would allow us for inorganic growth in the over a period of 3 years, which we had not earlier planned for. So that would also add value to the organization. So we have to offset any value diminution because of dual listing with growth of the business, both from an organic and inorganic way. So one of the examples, it could be that if we raise additional capital, this will give us enough money to acquire new businesses which are complementary to our businesses and accelerate our growth. So that's the various options we are looking at.
How do you see the borrowing mix and the share of, CDs change going into FY19, FY20 more specifically, and how do you map the impact on the cost of funds?
Well, I think from the cost of funds point of view, we've exhausted the entire, we've eliminated the high cost of funds, and we will be raising additional tier 2 capital from IFC, about $50 million rupee equivalent worth, and we are able to raise money through refinance and also able to ramp up our deposit base. So from that perspective, from a liquidity perspective, we don't face any issue. Also from the asset and liability management perspective, we have a very strong balance sheet. So we don't expect our cost of funds to go that much in the next year. But at the same time, as we are ramping up our business, we should be able to bring our operating costs down, and that I think will give us a good opportunity to deliver good results in terms of P&L next year.
And can we see your AUM grow 30 to 35% for FY20 as well?
Yeah, we expect the AUM to continue to grow between 30 to 35% next year.
What is your understanding of what is happening to the MFI space? The growth is great, but when we are looking at agrarian stress, when we are looking at rural stress, do you think the MFI space or the small loan space will get impacted? The macros are not favorable, let me put it this way.
Well, from a growth perspective, we don't see any issue. Yeah, there is, obviously an agrarian problem. There is the election coming up. Those are the uncertainties which are there. But, our business, first of all, is diversified in the sense that even in micro banking, because 1/3 of our business is in urban, 1/3 semi-urban, and 1/3 rural. So far, we've not seen any kind of stress, and the growth is there. We can grow significantly even in our microfinance business going ahead. The elections and the whole issue of loan waivers creates a little problem, but so far the impact is minimal, and we hope that better sense will prevail, and that loan waiver issue will, people will look at it from a much more realistic and perspective. In any case, loan waivers, etc., do not impact us that much, because even in the agri loans which we have, our component of crop loans is relatively small compared to loans for animal husbandry, etc., which is less impacted by the loan waiver, issue. These loan waiver issues impact the public sector banks much more, and the cooperative banks not so much, as far as we are concerned.
Mr. Ghosh, appreciate your time. Glad you could join us.